Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Oana.
Okay, we're going to do a market update for Las Vegas.
Yes.
We'll jump right into it.
Yes.
Okay, we'll start with Market Action Index 45. It's what it was last week.
Yes.
Little blurb at the bottom says home sales continue to outstrip supply, and the Market Action Index has been moving higher for several weeks. This is a seller's market, so watch for upward pricing pressure in the near future if the trend continues. We're going to jump back over. We have a whole slide that shows you the trend of this for like the last 5 years.
Okay.
So give you a good idea what's going on. We'll jump over this real market profile. As you can see at the very top, median list price is $559,250. It was like $558,500 or something last week. Okay. So it's basically the same.
You'll excuse me if I'm kind of choking on this. This is Las Vegas. Our median price is $559.
It was $495 in February.
That's my point. This is insane. This is Las Vegas.
And stuff is selling too, because remember, if you go down to inventory, you can see it's been declining since February.
Yes.
So obviously those 495 properties were selling and pushing prices up. And then if you see the price per square foot, I think it was $249 and now it's $256. So it's up $7 a foot. Got another chart that shows this pretty well.
So there's something that I want to talk about for a brief moment.
Okay.
So we're seeing this upward pressure on pricing, and I fully acknowledge that while I'm choking on it. I'm acknowledging it. The thing that I want to point out is that does not mean that homes are overpriced. Okay, homes that come on the market and they are priced optimistically, they will linger and they will get taken off the market. Okay, homes that are priced appropriately, those homes are the ones that get interest. Homes that are not in good condition, that are not attractive to buyers, will not sell. So just because we've got this whole upward pressure doesn't mean that people are willing to throw money at anything that happens to have four walls. So I want to make sure people understand that we're not in a position where people will just buy anything and throw any amount of money at it.
Right. Yeah. There's obviously the panic that happened last year has gone away.
Yes.
This was the 2022 spring bubble that created this false, I'm going to show you a chart that'll explain it better, but this idea that people are pointing at that is, Todd, home prices, they've always been, $600,000 in Vegas, like for decades. And now it's called collapse. No, it was never $600,000. No. Okay. All right. This is Market Action Index over the back to 2018, so 5 years. If you look at the two humps, this kind of looks like a camel. It's got two humps there. That was 21 and 22 in the spring of those years where it was really crazy. But if you go back to 2019, 2020, which was more of a normal market, that you saw the Market Actions Index normally 40 to 45, which is really what it is now. So this is a normal market. Now, interest rates are higher.
They are. But
it's certainly affecting affordability, but it's not necessarily crashing the market.
Right. So it's not. So let me kind of make a distinction here. Affordability is clearly negatively impacted. So less people can afford the houses that they would like. Okay, and I'll give you that. We are turning less transactions. Absolutely. That's not the same thing as not having buyers for the houses. We do have buyers for the houses that are currently on the market. The whole issue here is lack of inventory. So it's the lack of inventory that's causing the less number of transactions, and it's the lack of inventory that's also helping push nice houses up in price.
Here's price per square foot. I want to point out that you have to the left half of this chart the nice, steady, very slow increase in price per square foot, then the pandemic-induced redistribution of people, rapid increase, and then the final bump there is just the pop of interest rates going up and everyone trying to scramble before they went to some number they didn't know what they were going to be. And then you see an adjustment, but you can pretty much draw a line through this and see where it should have been. But here's the thing. This is my contention. The crash bros are telling you high interest rates will crash the market, and it didn't happen, as you can see. As a matter of fact, nationally, at the peak in June, median home prices were 449 in May of last month, 441. Guys, 449 to 441, and they're expected to go up in June, 440, 445. So we're literally going to see a year over year about 1% change in the real estate market, even with interest rates like literally double. Here's my contention. If interest rates had stayed at 4%, 3%, home prices would be up 20% than they were last year. So here's what I believe, and here's what Barbara Corcoran believes. And I'm telling you this because we're buying a house, and the house is pretty expensive. And you know what our lender told us? Get the house while you can, because as soon as interest rates drop, money is going to flood back into the market. People are going to flood back into the market. You won't be able to buy that house next year if interest rates are 2% less than they are right now. Even though your interest rate's high, buy the house. We'll refi it in a year or two when interest rates drop. But don't wait for interest rates to drop. We're not telling you to buy now. We're just explaining what's going on. Obviously, the time to buy a house would have been 2009 to 2012. Go get in your time machine, fly back there and buy a bunch of houses.
Right. But remember, the time to buy a house when it's the right time for you, the right time in your life, in your situation, when all your planets, or a sufficient number of your planets align, okay? It's not about interest rates. It's not about home prices. It's about what makes sense in your life.
This price per square foot chart you've been looking at, the little dot above the 7-day average shows that the prices are still going up, probably peak in June, just like they did last year. That's what tends to happen. Inventory. This is what I want to point out on this chart. This is inventory, goes back to 2018. You can see inventory was low in 21 and 22. That was the lowest we've ever seen. The bottom of this chart's not 0, it's 1,000, by the way. This is what I think is interesting about this chart. At every single place on this chart, the 7-day average inventory was already climbing. If you look at the little diamonds, inventory is already starting to go up. It's still going down now. That's kind of the weird thing, is we're sort of having a later fall or later spring with buying, even with interest rates at like median 30 years, the average 30 years at like 6.7%.
Right. Very interesting.
And it looks like inventory will probably drop for another, few weeks before it's.
Well, like I said in a couple of videos ago, I said, that the spring buying season is an extended buying season this year because there hasn't been a lot of inventory, so people are still looking. They still haven't found the right house. Median
days on market. What's interesting about this chart is you can see that it did get a bit stagnant toward right around Christmas time to the beginning of the year. These were a lot of people who put their homes on the market trying to get the June price that they couldn't get. So they just sat on the market for a long period of time. But remember, we never got inventory other than going back to normal. But this is the thing I think that's interesting about this. It's the trend. And almost at every point here, the median days on the market, the 7-day and 9-day were the same, or the 7-day was more. It was increasing. And you can see that it's still dropping this time of year. So that just tells you, that's just an indicator of what's going on in the market.
Right.
So it's still a bit more busy than it was, and even more busy than it was in 20 and 21 and 22. But it's adjusting. That's why.
Right.
There's been a lot of adjustments the last year. We literally said this. We literally said this was going to happen a year ago, and people laughed at us and said a bunch of crazy things.
Well, and my take up on 2023 is that it's just a lot of stability. Stability is not sexy, but it's good.
I want to just really quick jump into condos. The houses is houses and townhouses. This is condos. It's only condos. Market Action Index is 48. It's a strong seller's market. So it's a little hotter than the housing market. It always is, though, because the price point is less. And then real-time market profile, you can see that it's a bit, it doesn't move as much. The condo market doesn't move as much because it's not as affected by loans. Right.
Because remember, condos, they have a greater share of cash purchasers for 2 reasons. One, because not all condo complexes qualify for different types of financing, and 2, because it's a lower price point, so investors are more likely to make a cash purchase.
the next chart I want to flip over to for condos is inventory. And if you look all the way to the right, that's where we are today. Mm-hmm. What you'll notice about it is if you can see 2019, 2020, that's more of a normal amount of inventory that we have for condos. We're about where we were in 2021, which was a pretty hot year for buying. At the time, it was probably the hottest year in decades in Vegas, was 2021 for the most number of purchases. Of course, you can see 2022 got hotter. The brakes kind of went on a bit, but it's pretty hot in condos. And if you watched, we did an update, but we talked about, we do know this, over half of all condos in Vegas are either being purchased with all cash or are free and clear. Mm-hmm. And we're going to talk more about that in detail, but we do have some very interesting numbers on that.
Okay.
So anyway, that's it for the Market Action Index. It's not a lot different than last week. We've been doing these weekly. We may, in the summer, go back to like every 2 weeks or whatever. We'll see. Because expect it to be, my opinion is the summer will be kind of ho-hum.
Well, the whole year, as far as I'm concerned, has been ho-hum.
The whole year has been ho-hum. Mm-hmm. There's less transactions than normal, which is, you'll probably see some agents exit the business. Mm-hmm. But, everyone's waiting for inventory to come back. But I think the problem is going to be until interest rates decline substantially, we're not going to get more inventory. And even when that does happen, I think more people are going to flood into the market. So I think we're in this weird phase where we just have more people who are never going to sell. So the effective amount of homes that are available to sell is less. Mm-hmm. That's the shift in supply. It's not the total number of homes. It's the total number of homes willing to be sold. And I think that's the fundamental shift in housing. That's why interest rates have not decimated the housing market.
Right. So what do you think? Does this make sense to you? Is this what you expected for this week's market update? Let us know in the comments. We want to hear from you. We appreciate your comments. You don't have to agree with us. Go ahead and leave us comments. Please be nice to one another in the comments. We appreciate everybody being polite. Please remember to subscribe. Hit the notification bell so you get notified when another amazing video gets put out. Like the video, share the video, and we'll see you on the next video. Bye.
Bye.